Hey guys, Brandon here. Coming at you today to talk to you a little bit about the difference between investing and gambling. It's often referred that investing and gambling go like hand in hand. Look, they're the same thing. This is not true at all. You think of investing and you think of gambling as one and the same, especially the way we're kind of taught. We're not taught financial education. We're not taught about generational wealth, business building. We're taught very little in school when it comes to the power of compound interest, because that's not the way the schools are designed. They don't want, schools are not designed for us to know all of these things, because if they did, and everybody knew how to make money and invest and make way more than their savings account, then there wouldn't be enough people to push your groceries and or take out trash or be in the construction business or whatever the case may be. Anyway, so let's dive right into it. So looking right here, I just put a couple different facts down here. So we got a little bit of a definition. Investing is the act of allocating resources, usually money, with the expectation of generating an income or profit. Okay. Of course, like this could be anything. You can invest in, businesses, assets, real estate, anything that you purchase to try to sell later for a higher price. Okay. Most people buy houses, keep them for 5 or 10 years, sell them, and they make a profit. That was, in a sense, an investment. Purpose. There's purposes to many different types of investments, but basically is to work and potentially build wealth. Smart investing may allow your money to outpace inflation and increase in value. Now, we all know inflation is rampant, and it's been increasing and increasing, especially with all this money printing over the past couple of years. So, investments are definitely help with that to keep your dollar stronger anyway. So this is a fun fact here, and an interesting fact that most people don't even realize that they're investing. And we all do, or we have, to some degree. So 8 types of saving and investment options include savings accounts, stocks, certificates of deposits, bonds, mutual funds, real estates, commodities, which is like copper, corn, and annuities, which, annuities, get $1,000 a week for the rest of your life that I've left you in my will. That's like an annuity. So now, an investment. When you put money into a savings account, that's a type of investment, right? You're putting your money into a savings account with the bank, because you put money into a savings account, they give you a 0.03, maybe 0.08. It just depends on the bank. Interest on your money, which is really pennies on the dollar when it all adds up. And then, of course, they take that money and then they turn around and lend it out for way better interest rates than they give you, for sure. But still, nonetheless, you're investing. It's just not the best form of investing. It's very low gains when it comes to stuff like that. All right. Okay, so benefits of investing. I've got my own benefits. I think a lot of people have their own reason for investing, but potential for long-term returns. Long-term to me is usually, I would say, 5 to 10 years is pretty long-term. Some people would, maybe say a little bit less, a little bit more. Warren Buffett would say 30 years is long-term. So while cash is undoubtedly safer than shares, for instance, if you hold cash, you know that the cash is going to be there. Shares, it might fluctuate. They might go up, it might go down, they might go up, they might go down. But if you look at a trend line, especially good quality companies, they usually always have an uphill trajectory, as in where cash, it's not going to grow much. It's going to actually devalue, outperform inflation. Usually anywhere from 6 to 8% inflation a year. That's what they'll tell you with all the data. I mean, I don't know. I mean, you could really, say that's anywhere from 14 to 19%. I mean, if you look at the price of bread and milk, 20, 30 years ago versus today, I mean, it's kind of I think they kind of tweak some of those numbers. Provide regular income. This is a big part of it. A lot of people invest in companies that offer dividends, and you have enough money. Let's say you got 1,000 shares of like annually capital or something like that, where they give you dividends either quarterly or monthly. You got enough shares. I mean, you could generate as little as maybe a Netflix subscription all the way up to a car payment a month just by holding these stocks. Good, strong value companies that offer dividends and have offered dividends for many years and have increased their dividends, have good income statements and year-over-year revenue growth. You don't want to just get into any type of dividend play. It can be a source of income. Tailored to your changing needs is more or less like, so let's say you're investing, you're really into, let's say, electric vehicles, which I am right now, and I really feel a lot of a big connection to certain EVs. I have a tendency to learn a little bit more about EVs, stuff like that, kind of certain of the things that I would like to look for in EVs. So in the future, I could probably, get an EV car, which I do not have one yet. I'm still going on the old combustible engines. But so you don't have to own a stock forever. If you see a value play that you really like and you really appreciate the company, and then things start changing or management goes bad, you don't have to keep that company forever. You can sell that stock. You never have to get emotionally attached. Invest to fit your financial circumstances. This is a good point. A lot of people think, oh God, I don't have millions. I don't have tens of thousands. You don't have to. Not nowadays. I mean, you can invest with as little as $5 with fractional shares. As much as you want. High quality value companies, and that'll just get your foot in the door, Okay, so a little fact here. 94.6% of U.S. households, approximately 124.2 million, were banked in 2019, meaning that at least one member of the household had a checking or savings account as of December 2021. So right there, that savings account, that tells you enough right there that everybody invests, even if they do not know it. Okay? So right here, gambling. We had investing, now we got gambling. Playing games of chance for money, betting. Take risky action in the hope of a desired result. This right here is pretty much the only definition you're going to find when it comes to gambling. There is no sort of cost basis. It doesn't talk about anything about compound interest or nothing. This is a complete gamble right here. Okay, so to me, investing and gambling are way different versus, you see, we're gambling and investing. Okay, so I also want to show you another, call it on-chain metric, if you will. Okay, so to give you a little bit of just kind of an understanding of what compound interest and just the value of stocks can do in general, let's take a look at Apple. Okay, everybody knows Apple. You're probably watching on an Apple product, probably have many different Apple devices, know of Apple, whatever the case may be. Everybody knows Apple, right? So what you probably didn't know is how good this company actually is. So if you look right around in here, that little bitty green dot, that's right around the time that Apple really, started getting in the door. That was back around 1981, okay? And if you look right up here, right there, you will see that's pretty much where we are today, here in 2022, okay? So as you see, and Apple is sitting anywhere between $173 to about $180 a share right now. Okay, I own a good bit of Apple. I've owned Apple for a while now. I appreciate it. I'll probably own them for long term, 5 or 10 years. No doubt about it. I probably will not sell my Apple anytime soon. Anyway, they also offer a nice little dividend too. So we get this point, and then we got this. What is the difference between that? Well, let's look right here. So from 1981, of a share price at 13 cents, all the way to today's price at around 180, Apple has grown 142,564%. That is massive. That is massive. So let's look a little bit of the detail, some of the detail on that. So Apple, which is a ticker symbol AAPL, in 1981, shares were trading at 13 cents a share. 2022, shares are trading at around $180 a share. So 1981 through 2022 was a growth of 142,564%, meaning in 1981, $1,000 invested would equal $1,426,647 in today's money. That, to me, guys, does not seem like gambling at all to me. And this is just one example of many of the thousands that you could go through and see the whole difference. How many people in the world, I should look that statistic up, have ever won the $100 million jackpot at a casino versus how many people have become millionaires by investing. I bet you the number is way greater when it comes to investing. Anyway, guys, thank you for coming and watching the video. I hope you enjoy the channel. Please like, subscribe, hit that notification bell. I'm going to be coming out with more videos. Anything to help you and myself along this financial journey. Thank you.